On this next chart, let's make a couple quick notes. First, take a look at these buy signals that you get from these indicators. Now, in no way would you want to be long in here. But if you just followed these indicators blindly, you would suffer one losing trade after another. Now, answer this question honestly to yourself. Would you know in advance to ignore these indicator signals? I sure hope so. Now, according to the Trading Concepts method of trading, we would positively be looking to go short this market. Now, right in here is where we would have our initial stop loss. Okay? But again, not an entry. We wouldn't be entering until about here. Okay? See that? So, further, if you notice the market went down for a short period of time, then popped back up and rallied beyond our sell point. Fortunately, you should have taken your profit before that time, or at the very least, you would know how to protect yourself from an adverse move like this one. And what I teach in the course, you would have taken profits, you would have been out of the market indefinitely. Okay, up until that point. But believe me when I tell you, a lot of you can improve your trading immensely by adhering to this concept. I've yet to meet a trader who is consistently profitable using nothing more than indicator signals. Again, remember, indicators by themselves are merely tools. They will not make you a good trader. Yet, most companies teach nothing more than indicators, which look great in hindsight, but don't work real well in real-time trading. Plus, on top of that, they charge you a lot of money for them. Believe me, there's a lot more to trading than merely using technical indicators. In fact, let me stop you right here and interject some plain old common sense to this, okay? If you take a look around at any other profession, the people that are rewarded the most are really good at what they do. In trading, you can multiply that 1,000%. Successful traders are good at what they do, and they did not get that way by attending a 3-day seminar and going home with a bunch of indicators in their bag. Remember, no one is going to throw money at you because you learn a couple moving averages and a few indicators. Our company is vastly different. We are committed to making you good at the job of trading. That's why we give you lifetime access to us. That's also why we back our program with a 100% satisfaction guarantee. Even if you do not become a student of mine, you can greatly improve your trading by applying these principles to what you're already doing. Learn to separate the criteria you have for your trade setups and develop additional criteria for actual trade entry. Many professional traders will tell you that finding winning trades is not the hard part. The hard part of trading is learning how to stay out of marginal trades that turn out to be losers. I'm sure many of you can relate to that. I do not want to make this DVD a sales pitch, though, but I really hope that you will come on board and become our student so that we can help you in these critical aspects of trading. Now, let's move on to point number 3. Entering the trade. As I said before, a trade setup is not the same as a trade entry. If it makes it easier to think about, think of a trade setup as a flashing yellow light, alerting you to the possibility of an upcoming trade. But still, we have additional criteria that must be met first before we have actual permission to get into the market. Up until now, the trade setup simply means maybe. In our trading method, we look at a chart and always ask the question, are we looking at a valid setup right now? Remember, prior to this point, we have determined the context of the market, how we are going to approach the market, and what tools we are going to use to approach it. At this point, we're just looking for the trade setup. Now, here's a good point to remember. If we ask the question, are we looking at a valid setup, and you find the answer is no, guess what? Guess what we're doing? We're doing nothing. Believe me, that sounds the easiest, but it's probably the hardest thing for traders to do. I would estimate that more traders have lost more money because of their inability to wait than on any other factor. Patience is a virtue, and nowhere is this more true than in the world of trading. In fact, here's one of my favorite quotes from Jesse Livermore, regarded by many as the greatest trader of all time. After spending many years on Wall Street and after making and losing millions of dollars, I can tell you this. It never was my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. Jesse Livermore. Now, let's assume that yes, you do have a valid setup, according to our trade criteria. At this point, we need to be ready for a trade entry. Every time we have a valid setup, we need to be ready to enter the market. This means we need to know where and how we are going to enter this position. But before I show you a few charts with some of the tools I teach, I want to show you a few charts with no indicators whatsoever. So let's take a look at a few charts. As you can see on this chart that you're already looking at, we have a valid setup right here in the market. So, we're ready to enter the market if and only if we get a confirming entry signal. Hopefully by now you're starting to understand the difference between the two. Okay? According to the method that I teach, we would be looking to enter the market long in this area right in here. Okay? Due to some of the select criteria taught in my program. And according to what I teach in our trade management section of the program, which is point 4 in the 4-step sequence, you would have caught most, if not all, of this entire market move if you had chosen to use the trailing stop methodology that I teach. Okay? And if you had just taken your profit objectives that I teach, they would have been met right in this area. Okay? And then, if you're flat to market, you would have had a re-entry into the market right in here. And heck, if you were out and you took the profit objectives again, you would have had another re-entry right in here. Okay? But again, in my program, I teach you not only how to enter the market, but exactly where to take profits and where to trail your stop if you decide to trail up a portion of your position. Alright, let's take a look at this next chart. Just to let you know, it does not matter if the market is going up or down. The same principles apply. Now, take a look at this obvious downtrend. Okay? Very clearly you can see the market trending downward, giving us clear setups in this area. When the market came down and made this new low right up in here, your actual entry into the market was right up in this area. Okay? Then the market came back down, made a new low right in these areas right in here. Market popped back up, gave us another beautiful entry right in this area. Market came down, made new lows again, and then came back up and gave us another beautiful entry into this area. Market dropped down again, made a new low. All these new lows down here, right? And the market popped up again, rallied up off the lows, gave us a nice entry into the market to the downside. Now on all these entries, the profit objectives that I teach in my program were easily hit to the downside. And again, if you had chosen to take off a portion of your position at the profit objectives, your trailing stop would have kept you in a majority of this down move. Okay, so as you can easily see, it doesn't matter if the market's trending up or down. What I teach works in all scenarios, up, down, even sideways, and we'll talk about that in just 1 minute. Alright, here's an interesting chart because it ties two types of markets together, okay? An uptrending market, okay, which turns into an eventual side market, okay? Remember this important point, very important to remember. Sideways markets are born from trending markets, and trending markets are born from sideways markets. Okay? So if you look here on the left of your chart, the market was in an uptrend. Right up in here. Okay? Now what we got here, according to what I teach, right at this level, right in here, you had the context of the market, which was up, and the setup, which was right in here. Okay? The market pulled back, it gave you a beautiful entry, according to what I teach, right in here. And you also had a confirming bar, okay, to confirm that the market should in fact move higher. And according to what I teach, all profit objectives would have easily been hit to the upside before the market eventually came down.